Hey everybody, welcome to Mortgage Today for Tuesday, September 24th, 2024, and oh, what a day it was. UMBS opened up 5 basis points in early trading. S&P futures were up 6 3/4 points. U.S. stock futures were volatile, while global equities rallied after China announced to give. U.S. stock futures were volatile U.S. stock futures were U.S. stock futures were volatile while global equities rallied after China announced significant stimulus measures to boost economic growth, including cutting reserve requirements for banks and injecting $114 billion in liquidity. The S&P 500 showed signs of a flat opening while European stocks rose 0.6%, particularly in sectors tied to China. Yesterday, the S&P 500 reached its 40th all-time high of 2024. Treasury yields increased while oil prices climbed on hopes of a stronger Chinese economy, and gold hit a new record. Despite the stimulus, BNP Paribas cautioned it may not immediately alleviate downside risks, especially in Europe. Investors now focus on upcoming U.S. economic data, including the Fed's preferred inflation metric and consumer spending, for clues on future rate cuts. Risk assets received another boost yesterday from the latest Fed speakers, who affirmed their plan to keep cutting interest rates, with Goolsbee saying many more rate cuts over the next year. Neil Kashkari expects the Fed to dial down the pace of its cuts. Meanwhile, Atlanta Fed President Ralph Bostic expects the Fed to move aggressively to get a neutral rate. Futures are pricing at a 54% chance of another 50 basis point cut in November. The economy grew in September, however, services continue to be the driver while manufacturing wanes. Confidence is deteriorating as input costs continue to rise, especially labor. The first few hours of domestic trading caused some concern that the post-Fed rate correction was far from over. At the time, yields were up several basis points from closing levels and had just broken above yesterday's highs. That's not the sort of thing you want to see if you're hoping for bonds to level off. Everything changed after the consumer confidence data. While this isn't a report that reliably causes a reaction from the bond market, its labor differential component is more closely watched recently, derived by subtracting the jobs hard to get line item from jobs plentiful. The differential is increasingly pointing towards a softer job market, something that is well understood to align with more aggressive Fed cuts. Rate cuts from the Fed. UMBS closed the day up 9 basis points at 101.42. So as we look at this, 101.42 puts us in the upper end of this pretty wide range. We have a ceiling at the Fibonacci line at 101.52. And then we have the 25-day moving average, which is moving up to meet it at 101.16, though that is pretty wide, so that tends to get bumpy. As you can see, we've traded in basically that range for going on 2 weeks now. But in terms of things you can control is your own brain and the things you do. So check out this post from our sponsor at wellthatmakesense.com. This is reading notes from Discipline Equals Freedom by Jocko Willink. In sales, there are no weekends off. Every day is a work day. If you embrace the grind, you will achieve more. So it's all about using discipline to create the right tasks.